Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Good day, Sandra. Thanks for confirming it. Let me display the PowerPoint presentation. Asian session live market analysis on January 15th, 17th between 5 and 5:30 GMT. So we will track the market using the live market code page. I'll give the link for the same. You can open it in a browser. I'll also focus the camera over that as the live market code page. It is review using the live market code page where exactly the currencies are trading. Currently Euro is trading around 1.3335, 1.3337. The low is 1.3334. The high was 1.3433. I think that is the high set on Friday. They just brought in as a target by the interbank treasury. And the net change is about 51 pips negative net change. So you can understand that Euro has made about 50 pips drop from that of Friday close level. And GBP is trading around 1.5851, 1.5855 or the bid and the ask. 1.5842 is the low, 1.5881 is the high. 14 pips negative net change is seen. When Euro is showing more net change, negative net change, GBP is showing lesser negative net change. As a result, you find Euro GBP has made further drop of about 24 pips. So it was hovering around that of 0.86 and then from there it has come down. So as week beginning, they are trying to handle the crosses before coming to the other majors. Then in the case of Yen, 82.88, 82.91 are the current levels. 82.71 is the low, 82.99 is the high. A very narrow spread is seen and you come across about 2 pips positive net change. And in the case of USD CHF, 96.38, 96.41 are the current levels, 96.24 is the low, 96.54 is the high. 5 pips positive net change is seen. So in the four majors you come across that USD gaining moves. A nominal USD gaining move is seen in the case of the four majors. But coming to that of the commodity pairs, you find a Canadian dollar is trading around 0.9887, 0.9891, 9876 is the low, 9899 is the high, 23 pips negative net change is seen. And also in the case of Australian dollar, you come across 9 pips negative net change. It is trading around 9876, 9879, 9870 is the low, 9915 is the high. So you find about 30 pips drop, 45 pips drop from there as a high, but 9 pips net change is seen. So they made a small gain and then dropped, and ultimately you come across about 9 to 10 pips negative net change. When Canadian dollar and Australian dollar are showing negative net change, we understand this is a contrarian move. As a result, we know that they wanted to handle the crosses before coming to the other majors. So during that of the Japanese session, they wanted to handle the crosses to start with and just make a little bit of downward stopping and then subsequently gain the levels in the case of the crosses. And coming to that of the yen crosses, we come across again a negative net change is seen in the case of Euro yen and GBP yen because a nominal gain is seen in the case of USD yen, whereas the drop is more than about 15 to 50 pips. So as a result, you find a nominal negative net change is seen in the case of yen and GBP yen. So this is a week beginning downward stopping in the case of the yen crosses, and then subsequently they are expected to gain the levels. So whatever you come across as a week beginning move, we know that they wanted to make a false move. So in which particular session they wanted to make the false move in a aggressive way, we need to identify. So as per the algorithm, they are expected to make the week beginning false move during the Japanese session and then subsequently gain the levels in the case of Euro and GBP and continue the contrarian move of gaining the levels in the case of USDN and USD CHF and also Australian dollar and Canadian dollar. So in all the currencies, they are expected to gain the levels in this particular week. And we would have seen the first week they made the volatile moves in order to create the bearish feel in the market. And then subsequently, in the second week, they made aggressive gains in the case of Euro and GBP. And we know that that was unexpected by many of the analysts for the simple reason that it was breaching all the supports and going down. So immediately they thought that the channels will go down further, but subsequently the players reversed and acted against that of the sentiment created using some excuse like the bond sale, etc. And then they are given a quantum of nearly about 300 pips for the bond sale. It is unimaginable. So they use that sort of sentiments in the market and make the trap for any side. So either they trap aggressively the long holders, and followed by that they trap the short sellers aggressively. So when everybody was talking about sell and rally, they would have seen what is the impact of it. So this is how they induce the analyst to say so many things by breaching all the supports, and then subsequently then the analyst could say that the market has turned, breaching all the resistance. So this is what happens in the market. I'm not trying to blame the analyst. The analysts try to go with that of the market trend, but they fail to understand that the players are the buyers at the lowest level, and because of that you find whenever the turning up happens, then it becomes a surprise. So if you want to get rid of the surprise from the other market, we have to find their hidden agenda, what they are trying to do in the market. So they cannot bring Euro or GBP to zero or to infinity. They can only make a drop on the rise. So whenever the sentiment has not become very strong, then they try to make some extreme moves. So similarly on the downside, you would have seen that Euro went down to 1.30, 1.29, then 1.2870. Subsequently, when the sentiment became very strong, they quickly reversed. In one go, about 3 days, they gained about 500 pips. Nearly about 500 pips. So this is what happens in the market. So when traders think that, okay, we missed the buy opportunity, why not we do a sell and buy trade? They don't do the swing until the end of that particular week. And now the trending move, as they initiated in the second week, and the third and the fourth week also, they are expected to continue the trending move. So as a result, avoid shorting the majors, and you can only try to do buy and sell trade, buy during quick drops so that they will be able to gain quickly the levels, and that will give you the profit. So trade in line with that of the players, but don't trade in line with that of the market sentiment. They create the market sentiment and act against the traders. So if you try to follow the sentiments, we will be vulnerably trapped on either side. I'm not trying to blame the analysis, but I'm trying to caution the traders that because predominant of the traders use such technical analysis, and whenever it fails, they go in for an alternative analysis, but it is a never-ending process. Why? Because all the conventional statistical analysis does not explain any cunningness of that of the players. When the players are making such moves, cunning moves, how can statistics explain such cunning moves? It can only explain what is visibly seen in the market with regard to the levels, but the hidden agenda or the cunningness of the players will not be disclosed. So that we have to question ourselves. When the market is drastically dropping, who is the buyer and why he is buying? Is he a fool to buy all those levels? So if you question that, then we will be able to understand that the players create the sentiments and act against that of the traders after accumulating positions. So at the lowermost level, they have just accumulated the position, but in a range. They will drop about 300 to 500 pips and accumulate the position. And in one go, they gain all the levels and book profit. And then you might think that, okay, they are going to drop it back. Then they extend it upward because they know after gaining the levels, the traders hesitate buying it. They only try to sell near that of the resistance. Then they take it up to the resistance and drop as if the market is going to drop again. Then next time they breach the resistance and go above. So you have to understand their false moves, and we have to understand their intentions. By that, all their intentions is very clear that they wanted to make money by creating surprise to the other traders day in and day out. So that we need to perceive it in the market. So let me go back to that of the PowerPoint presentation. So what are the expected moves today? So today is a holiday in US, so obviously the traders will try to hesitate taking positions in the market, but still the players will try to make the swings in the market in this today as well as the rest of the days in this week. So during Japanese session they are expected to swing and rise slowly, and during the European session they are expected to swing and rise and continue making swings near that of Friday high and slightly above during that of the US session. So week beginning false move dip could be seen during early Europe Japanese session. Then afterwards they are expected to gain the levels, and tomorrow we could come across that they could again make a dip during the start of the day and then subsequently gain the levels, and that could be a very volatile move. So in this particular week we will come across more and more volatile moves in the market, a quick drop of about 50 to 75 pips and in no time gaining back and further going up. That sort of moves could be seen this week. So be cautious with that and use all the trading strategies to limit the risk and maximize the profit, and don't simply think that the going is good, so let me not take any precautions. Don't have that such attitude, because the players can suddenly reverse quickly and gain back all the levels, and if you are unaware of it, you might cut that position with the loss. Later on you will find that the buy is really making profit. So that sort of moves could be seen tomorrow, and on Wednesday they are expected to gain more levels. So during the trading time you will not come across a wide range swings, and instead they will come across more trending move on Wednesday, that is midweek. Then Thursday and Friday again the full permittable level of the gains could be seen in the case of Euro and GBP, and also for the gains in the case of the denominator currencies. So they are the expected moves, and don't underestimate the players that the volume is thin, so they may not make further gains, and they could only make volatile moves in the market. When the traders turn long, probably they will try to rise it. Don't think like that. And when they gain the levels and the traders enter long as a breakout trade, they know how to hit the stops and go up further. So they are smarter than that of the traders. Keep that in mind. So whenever you come across very quick drop, you try to enter, and whenever you come across aggressive gain, you just exit out of your position with a profit and look for another drop. And don't think that all the profit what you come across in the market should be grabbed by you. So that is a very wrong attitude. That leads to that of the greed, or triggers the greed. As a result, you, instead of booking optimal profit, try to wait for more profit, and later on find that the position makes loss, or you missed the great opportunities. So don't be under the grip of fear or the greed. Try to estimate the market. Okay, they gained about 150 pips, so how much they can gain, and obviously if not today, tomorrow they will give a buy opportunity. At that time I will try to take another position. That sort of attitude should be there. And anybody who is buying from you should also book profit. The players are not fools to buy it at the highest level for a long time. So they will quickly gain the levels and hold the high, not breach the high. You understand that they wanted to book profit. Quickly exit out of that and then wait for the next drop. Then you know the three levels of drop they make, about 20-25 pips. This time they could make in order to attract more volume in that of the market. Then about 75 pips drop, you just try to take a buy position when the new low has not been breached for 30 minutes. Then you find that quickly they reverse it up and go above that of the high in one go. So you would have seen how exactly they are capable of taking the market on a one-sided way on the upside. So it is not that the economy is bad and things like that. Because of that the market is making moves, and it is players who are creating such sentiments in the market by exaggerating various type of news and analysis, and subsequently make the traders the victim for that when you trust it. So they try to aggressively gain the levels. That is what they had done it on Friday. Nobody would have anticipated. But we know that is the way they make the moves in the market. We know that the extended move they have made. And today they have just made a weak beginning false move during the Japanese session. And they are trying to hold it near the low. Now let us analyze how exactly the initial lows and the highs are being respected. In the case of Euro, 1.3334 was the initial low. They just now breached the low and formed 3328 as the new low. And we have to identify whether it is a stop point or just a continuation of the drop, because they have done about 59 pips up to 75 pips. If they drop, they can reverse it. But beyond that, if they drop it, then they may not rise it. They could make further drop on another 70 pips and then only gain the levels. So keep that in mind and accordingly try to take a buy position and see if they have breached 33.34 and the next psychological level is 1.33. If there are cluster of stops below that, then they will try to hit the stops and go up. So look for such opportunities and then try to take position. If they go above that of 1.3334 in less than 30 minutes, we understand it is a brief downward stop and afterwards they wanted to gain, so they are not bothered about the stops below that of 1.33 because they find more short sellers in the market. They are still not covered their positions rather than the long holders. So it is ultimately the question of who are in plenty, whether the short sellers are in plenty or the long holders are in plenty. They cannot punish every trader. They have to give opportunities for some trader on one occasion. So you will find that if there are predominant of the short sellers, still they are not covered their short, thinking that euro has to necessarily come down because of the economic conditions. And if they wait, then they gain further levels and induce them more fear. So you know that how they induced drop, and they induced the fear and finally asked the traders to liquidate their long positions. Similarly, they will also try to trap the short sellers. And you know that the market takes a longer time to gain the levels when compared to that of the drop. So keep that in mind. So they will take a longer time to gain the levels. And to drop, they just drop it in about 2 weeks and later on continue to gain. It is a question of only gaining and losing the levels in the market. It is a play and that is how they do it, and they induce the traders to expect some sort of move and act against them. So this is the only game. So we have to understand their game plan and try to trade accordingly. In the case of GBP, 1.5842 is the low. Still, they have not breached the low. They are closer to the low. The net change is about 19 pips. So this particular drop in the case of euro is mainly to handle euro GBP. It is evidential now. GBP has not dropped that much or not breached the low. So when they breach the low in the case of euro in one session, probably GBP they could breach the low during another session. So this is what nowadays the strategy of the players. So keep that in mind and don't immediately expect GBP has also to hit the stops at the lower level, and don't try to take a sell and buy trade. They could do it only after gaining the levels, because Euro GBP they just dropped it to below that of the initial low. 0.8417 was the low and they dropped it now to 0.8409. Then in the case of CHF, 96.24 is the low which is intact and 96.54 is the high, and you come across a nominal 9 pips positive net change when GBP has, Euro has dropped about 57 pips. USD CHF has gained only about 9 pips. So you understand that they are holding CHF in order to make a small drop in the case of Euro CHF. Euro CHF, you know that it came down to 1.24 level. From there they gained substantial level, nearly about 400 pips. And now you come across 42 pips negative net change from that of Friday close, and they are holding it near that of the low. They formed a new low, 1.2855 in the case of Euro CHF, and they are expected to gain the levels again there, as they are not bringing it to that of the negative net change. When they bring Euro USD as well as USD CHF to negative net change, then they can push it down and try to hit the stops, whereas they are holding USD CHF and only making a brief drop in the case of Euro USD. That shows that they are making brief downward stop and before making further rise. So this is how you have to read their intentions. It may be wrong, but still you have to conclude and try to narrow down your trading decisions so that you will be able to take the positions appropriately. Then USD Yen 82.71 is the low and 82.99 is the high, and they are not breeze, so you come across subdued moves in the case of Euro Yen. Not many traders are taking position, it appears. Then Australian dollar 98.73 is the low. Then currently you come across 98.67, they breached the low. Australian dollar on Friday also they made the drop, and that is mainly to handle the Aussie crosses, and they made a brief drop of another 18 pips. In the case of Australian dollar, they dropped it to 98.67, and once they go above that of 98.73, you could come across they breach the high. So this is weak beginning false move in the case of Australian dollar, and if they want to drop, they could have dropped more than 50 pips, but they had done only about 18 pips and made a brief downward stop to create the sentiment as if the flood is the main cause of this drop, etc. And you know that during the flood itself, we come across Australian dollar went up to parity, and from there it has made that drop because a lot of traders turned long for it to go to 1.03. So obviously they made the drop and induced them to liquidate the long position, and then they wanted to gain the levels. But Australian dollar, they are not going to give up in taking above that of the parity. Still, it is on the card, and they wanted to make extreme moves in the case of Australian dollar this time. And in the case of Canadian dollar, 98.76 is the low, which is intact, and 98.99 is the high. A narrow range swing is seen. They are not breached the high or the low, so they have only breached the low in the case of Australian dollar and also breached the low in the case of euro. So obviously they wanted to handle the respective crosses. So this is a weak beginning false move. They are doing it in the respective crosses. Afterwards you could come across continuation of the trend what they established last week as the gains in the case of euro and GBP. Don't think that I'm in favor of euro or GBP. That is what they are trying to do it. So I am trying to read it and try to give it over here. And it may be wrong also, but still you can also perceive it and do the analysis as I explained. And if you are convinced, then probably you can try to do trades in line with that of the player's intentions. Let me minimize the PowerPoint presentation and focus the camera over that of the live market code page and take up the questions which are asked here. Yeah, sir. What can we expect from Australian dollar? They have dropped to 0.98. Yeah, they made a brief downward stop, and once they go above that of the initial low, in the case of Australian dollar 98.72, then probably they could gain the levels. So they made only 19 pips downward move, and also in the case of Canadian dollar only 23 pips downward move. So both are showing nominal negative net change. So not much of a drop is expected in Australian dollar. So they could gain the levels. So below that of 98.75, the psychological level, they just made a drop to 98.67. And currently holding around 98.67, 98.70. And if they are not breaching this and go above that of 72, then you understand that drop was a brief downward stop. And similarly, in the case of 33.34 is the initial low. So 33.28 you come across, now they are firming up a little bit. Once the bid becomes 38, 34 and stays there for more than 30 minutes, understand the downward stop and is over and they wanted to quickly gain the levels. Can we see it below 98? I am not expecting it. Australian dollar go below 98 and they wanted to take it up to parity again. In big Paul. When you say dip, you mean currency in general will dip? See, I give all my analysis pertaining to that of Euro and GBP. Whenever I am talking about the USD and CHF and Canadian dollar, I use the terminology denominator currencies. So why I am focusing only on Euro and GBP? Because I suggest to the traders to take positions only in Euro and GBP because many of the traders have got a tendency to trade without a stop. So you will come across either way moves in them. So if you hold it for 2-3 days, probably you will be able to book profit. Whereas in the other currencies, it might be extremely difficult to do that. Your holding period will be long, that will be frustrating, and you may make a distress trade of liquidating at the lowest level when they are making further drop, and you may not listen to my word, and probably you will think that what is happening is true, the world is going to come to an end and all the currencies are expected to collapse as if US dollar is going to be the strongest currency. Then you liquidate, later on you find that they have started going up. So this is what day in and day out they do it. What else the players can do? They can only drop the currencies and raise the currencies. They cannot continuously drop or continuously rise. They just do that periodically, and we have to understand such trends. And whatever be the type of conventional statistics you try to do it, no, whenever the statistics says that it is in a particular trend, immediately you come across the fundamental news could be released, and it might be negative or positive to any currency. They can give different type of interpretation and reverse the market. So the entire reversal of Euro and GBP is pertaining to that of the bond sale. So, okay, the bond could have benefited Euro. Why GBP? So GBP gained the levels because of sentiment. But when you had noticed last month when Euro was gaining, GBP was lagging behind at that time. But now GBP is gaining more when compared to that of Euro. So this is mainly to handle Euro GBP. If you understand what they are trying to do it, then trading becomes a child's play. If you still think that it is a mystery, anything can happen in the market, then you will never be in a position to pinpoint what is happening in the market. And only you can give commentary after the event. Or you can just say that this is what happened in the market because of sudden intervention, this is what happened, or because of the data release, the market has reversed. So absorbing all the comments pertaining to technical analysis, then we switch over to the fundamentals. Then subsequently we follow technicals to see how exactly the trend is going to be. Then whenever the trend reversal comes, immediately we switch over to the fundamentals. So this is what we can do in a conventional way. But as trader, you won't be knowing which one is going to be addressed now in next 5 minutes, whether the technical is going to be addressed or a fundamental is going to be addressed. There comes the real challenge for the traders. So don't think that I am against. I am a statistics professor. I respect statistics. But the players, they make the market appear following statistics and reverse it. That is the irony in that. Then Anurag, crude will drop big once this winter issue, and now demands in crude because of extreme winter in some cost country gets over. See, this is one of the attributes for crude rise, and you just compare the data with regard to last winter season. Crude was trading around 65 to 63 level. So this winter is something special, thereby crude can go to 91. And Anurag, can we expect this gold has seen its high and will continue hovering below these levels? Now, in this particular month, they are expected to make wide range swings in the case of gold from 1335 to 45 level to that of 1420, 1430 level. And you know that they make extended move and follow up move the next day, and afterwards consolidate the higher level and quickly drop it and drop the next day, then consolidate at the lower level for 1 or 2 days depending upon the long holders liquidating the position, then subsequently gain back the level. This sort of wide range swing they are doing it. So you have to understand their patterns of moves. Then you will find it, okay, this is the time to buy and sell. This is the time to sell and buy. So no sentimental attachment to any currencies or commodities. Then Anurag, can we expect that gold is okay? Then Devangam, is high of 34.33 correct? As shown in the quote page, I explained in the beginning that 1.3433 that has not shown, but Friday high has been taken into consideration by Interbank Treasury. That shows very clearly they wanted to make an upward stop and about that today. Then, if you read more and more of live market quote page, you will be able to really understand how the players are using the simplest tool of live market quote page and trying to trap the traders. So you just to follow the live market quote page low on the high and also the net change, and continue to make a note of it between 230 and 330, or at the end of 330 make a note of the initial lows and the highs, and also make a note of the net change and track it on a daily basis during the week and the month. Will be able to easily perceive what they are trying to do it, because the players don't keep their analysis very complicated, because they will be spending a lot of time in doing the analysis by the time the market has to be moved, because you know that the pivot points and the supports, etc., sometimes they come closer to that and reverse. Sometimes they simply breach and reverse. So you have to identify what they intend to do. There comes your skill set. And the players do it very nicely. Understand they have the decisive information available. Because of that, they are able to easily drop or gain the levels, and they are not really nervous while making the rise or making a drop, because they know very well by making the rise they will make 100% profit, no risk. Then Jack, what is your view on Indian rupee against US dollar? Indian rupee in tandem with that of other currencies, other majors, is expected to become stronger. Then balance. Since we had a drop early Asian, we may get some late Asian. I don't think so. A balance. Please post. I'll display the forecast. Then House, what is your forecast on Euro and GBP in Forex FX Street expert poll this week? I don't know how I missed the poll. I not received the email to give an update. I don't know, or whether I missed the email, I am not very sure. So this is missed. So I'll see that it is not being missed here afterwards. Then he asks, GBP week beginning false mode drop. Can it fall below 58? No. Deep corrections, they may not do it. After gaining the levels, say to 1.59, they can drop it again to 1.58 or 5830. But if you look into that of the net change, it will be very, very nominal net change, less than 75 pips. And when they drop it from 59 to 58, it will look very big. The red candle formation will really give the fear, and nobody will be willing to buy it there. Then immediately anybody will say that let it come to 1.53, or probably it may breach and go to 1.47, then let me buy. But by the time they would have taken it to 1.60. So that is how they try to confuse the traders. So you will not come across net change coming in a very big way. Even in the case of Australian dollar and Canadian dollar, you can see that nominal negative net change they are making it The case of euro, they have made it because they have been considerably gaining the levels and they have dropped it, and now you see that they are closely coming to that 1.3332, 1.3334. Ask is seen. Now once it becomes the bid, that means it confirms that they made a brief downward stop. And in the case of Australian dollar also, after 67 they are slowly firming it up, and once they come to about 70 to 73 area and if they sustain, that means the brief downward stop and is over. So I explained the methodology for you to track it. So try to track the moves. Then you should track during week and month. So on Monday you compare the new week to that of the last week. Yes, you can compare it with that of the last week and the previous week and see how exactly they can do it. Then we'll be able to understand the trending move. That is the same study you do it with regard to the charts. So only thing is, in the charts the trend reversal is not intimated beforehand. That is the only hiccup. Otherwise the trending move is well explained. So you know that trending move, the higher lows formation, higher high formation, immediately the channels will be drawn, and as a result you will find that market is an uptrend and probably below that of the bottom. You can try to buy it. So when you compare it, you will be able to get the exact level and without discounting some of the extreme moves as noise. That is the advantage of using the live quote page. Then next month, comparing to that of the previous month, yes. You will be able to really understand if you try to compare it on a monthly basis. You will also understand the monthly limitations, what they face. Then JAG. So you need not straight away think that from 1.33 it can come to 1.27 or 1.21 and things like that. JAG. But with a falling Indian stock market, does it not imply INR to depreciate? Not at all, sir. You know, the same strategy is being played by that of the institutions, the foreign institutions as well as local institutions. They try to drop the market and buy. And why they are buying the stock after a year beginning drop? Because you know that in India the budget is being released in the month of February. By the time they will flare up the market and say that, okay, these are all the benefits you have got, and they will quickly gain the levels. So they first accumulate the positions and quickly gain the levels and book profit. Same what you have seen in the case of Euro and GBP. So this is the only strategy they can do it in any market for that matter. They have to drop, accumulate the positions. How they drop it? Doing circular trades. They sell it to themselves, they buy it. They sell it to themselves and buy it. So at the lowest level, nobody will be willing to sell, but they sell it and drop the levels. They know very well all the traders are holding long, and after a certain amount of drop, if they simply hold it and make even 1/5 drop, the traders will freely come and liquidate the long positions. You know how many times you have done it. You do a self-analysis, then you will be able to understand how many times you have done it afterwards the market reversed. Then what do you see with regard to USD Singapore dollar today? Do you see it's going above 1.0? So Singapore dollar is similar to that of any of the regional currencies that is expected to strengthen. Okay. Now let me go back to that of the PowerPoint presentation. No more questions. So expected market moves, swing and rise moves are expected during that of the Japanese session. Then initial dip during that of the Japanese session was a weak beginning false move. And European session swing and rise, they could do it in spite of US holidays. During US session they are expected to make swings, and tomorrow they are expected to make again a quick drop and then rise. And that is how during the non-trading hours, probably during the gap time or starting time, they quickly drop and then gain the level. So that you should be able to understand that In a thin volume condition, when the traders are not willing to decide about the trade, they quickly drop and hit the stops at the lower level and then quickly gain back the level. So you will come across such volatile moves happening very frequently in this particular week. A drop of 75 pips and gain within about 5-10 minutes the 75 pips. That sort of moves, knee-jerk reactions could be seen in the market. Be careful and trade cautiously, and don't be afraid of the market. Be cautious and try to see that market will continue to give trading opportunities. Whenever you come across quick drop and when the new low has not been breached, then you try to take a position rather than becoming addicted to trading and just grab the position as soon as you open the trading platform for the day without understanding where you are entering into the market. So with regard to the initial lows and the highs, Euro breached the low and they came down to 33.28 and now closer to that of 1.3334. And Australian dollar, they came to 98.67 and 98.73 is the low. Now you find that they have come closer to that. And rest of the currencies are making subdued moves. And in the case of GBP, they are not made the initial downward stop, and probably during the European session they could do it just to gain the level, some gain in the case of Euro GBP, and then continue to drop Euro GBP, and they could gain the levels in the case of Euro CHF and also the Yen crosses during the day. So I take this opportunity to thank FX Street and also you participants who have come here to listen to my Asian session live market analysis. I'll come back again same time tomorrow and do the review and the analysis of the market during the Japanese session as Asian session live market analysis. Thank you one and all for your patience. See you again.